Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk Executive Director of Global Content, Emily Parker. Good morning, Emily.
Good morning, Christine.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently at $39,011, up about 1.5% over the past 24 hours. CoinDesk Ether price ETX index is at 2865, also climbing just over 1%. And the DFX CoinDesk's DeFi index is at 213, also rising about 3.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So we've got an FOMC two-day meeting wrapping up today. They will have a statement at 2 o'clock, and Federal Reserve Chair Jerome Powell will hold a news conference as well at 2:30. Emily, anything you're watching out for?
Yeah, we'll see if this has any impact on the price. You know, Bitcoin has been a little bit boring by crypto standards, which isn't necessarily a bad thing for the crypto market, but there hasn't been a lot happening. It seems to have basically been moving similarly to the stock market, and we'll likely see that continue over the short term. So, there's been some action, of course, on the Twitter front with Elon Musk putting a collage of monkeys that seem to cause ape token to surge. So there's still, lots of weird crypto news happening in spite of, relatively stable price. In
terms of that FOMC meeting, I guess a lot of the price action has been baked in. A lot of people are expecting 50 basis point rate hike, and any hints as to any future action. We did see that private payrolls grew by almost 250,000 in April, which missed expectations according to an ADP report, because in March we saw that there was a much more sizable increase following, it was about 480,000 in private payrolls in March. So we'll see what action they have. Let's take a look at our first guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Always happy to introduce our next guest, U.S. Securities and Exchange Commission, better known as the SEC, member Hester Peirce, who most recently has made some news in the crypto world by going to Twitter to oppose the news that there have been some 20 new jobs on the regulatory agency's crypto enforcement squad. Commissioner Peirce said the SEC is a regulatory agency with an enforcement division, not an enforcement agency. Joining us now to sort of tease this out a bit further is SEC Commissioner Hester Peirce. Welcome, Hester.
Hi, Emily. It's great to be here.
Great to have you back. So, Commissioner Peirce, let's, as we know, a tweet, speaks volumes, but I'm sure we could tease this out a little bit further. So let's just talk about what is it about this news that caused you to make this statement? I mean, what does this actually mean? So they're adding some new jobs. Is this just kind of like a symbolic action? Like, okay, look, we're taking this seriously. Or do you actually think that these new jobs will lead to much stricter enforcement from the SEC?
Plenty to do on the enforcement in the crypto space. We all know there's plenty of fraud out there. We can spend resources on that and have spent on that, and I've supported that. What objected to is that we haven't set out a regulatory framework, and so we're cart before the horse. We're getting ready to enforce along all these lines without telling people what those are. And so that was really my reaction. I mean, having an enforcement team that's dedicated to this area is fine, but where's the regulatory team that's dedicated to this area? I've been calling for this for a really long time, and I've yet to see it materialize.
That makes a lot of sense. So I guess the question is then, what would these people be doing, right? If the regulation is unclear, but you have 20 new people enforcing this unclear regulation, what exactly would they do every day? I mean, how would this actually play out in reality?
Well, I think we can kind of take the types of enforcement actions that have come out so far, and some of them have been devoted to fraud. But I think if you look at others, they're really devoted to trying to establish lines using enforcement actions to establish those lines. Thinking, for example, the BlockFi settlement, there you're trying to establish a regulatory framework through the back door of an enforcement action. Why not have a public conversation with users of crypto lending and providers of crypto lending, and what regulatory regime makes sense? Maybe that's an SEC regime, and if it is, we can talk together, but design that in the context of enforcement action. It doesn't make sense.
I wonder what was the catalyst for this. Was that there was this need for more of an enforcement push, or what's the catalyst for adding these jobs? Is it because they do want to have more enforcement on things like BlockFi, other crypto lenders, or are there any other things that they have their eye on? NFTs, for example.
Yeah, well, the press release that announced this expansion of the listed a number of things, including NFTs and stablecoins, and I believe platforms, crypto trading platforms were on well. So I think that the idea is to, again, place emphasis on the fact that we think we have authority in these areas, and so people should be conscious of the securities laws when they're in these different activities. Again, I tell people that too, that you should be thinking about the securities laws because the securities laws have broad reach. The way of doing this is not to set up a big enforcement unit without also, and I would argue first, setting up a group of people at the commission who are going to think about the regulation and preferably do that in conjunction with other agencies across the federal government. That makes more sense. And so I don't know why we're doing it in this way, except to sort of send a message that we have the upper hand in these kind of negotiations around the regulation. And this isn't about someone getting the upper hand. This is about getting rules on the books that make sense and allowing people who are wanting to comply with the rules and understand the rules, allowing them to understand what they are so that they can come into compliance, so that we can focus our resources on the people who don't want to come into compliance and who are ripping other people off. I mean, that's where I want to spend the agency's compliance resources. Now, I should say that part of what the new unit is for cyber issues, and we all know that cyber issues are a huge problem across the markets and across different companies, all sorts of companies. And so having dedicated people who have expertise in cyber I think it's a good idea. But we tend to emphasize the crypto aspect, and it is done to get leverage in these negotiations around what regulation should be.
Interesting. Commissioner, you mentioned that this expansion of the enforcement will have more of a critical eye on stablecoins. And I do know that the SEC is investigating Terra Luna, and I'm wondering what your thoughts are on UST and algorithmic stablecoins.
Well, without speaking to any algorithmic stablecoin in particular, it's a new iteration of stablecoin. There's a lot of experimentation going on in that space. There are a lot of different approaches taken to what to how those algorithmic stablecoins would work. And what I want us to do is build an environment in which that experimentation can occur. Now, whether or not that falls within our purview, I think depends on the facts and circumstances. But broadly, I think the federal government should be allowing that experimentation to occur, ensuring that its regulatory objectives of protecting customers, investors, and protecting the integrity of the marketplace and financial stability, you can hit those objectives while nevertheless allowing experimentation. And I think there's a lot of really interesting, there are a lot of interesting projects out there trying different, and that's something that we should certainly allow to continue. And of course, caution people that when you participate in any of this space, you have to be careful and you have to be prepared to lose money, and you have to think about those kinds of things. So we have to, pair the experimentation with also cautionary language.
Yeah, I just want to add, tomorrow Tron is releasing USDD, another algorithmic stablecoin, throwing their hat in the ring, I suppose. And I wonder, and they're offering 30% annual percentage yield. So I wonder, how do you balance innovation with protecting consumers?
Well, I think consumers have to use their skepticism as well, right? When they these things, generally the goal is to allow people to experiment, but make sure that they're disclosing to the people who are purchasing their token or their stable coin or their NFTs, making sure that their disclosures around what it is that people are getting when they buy these things. So that's the balance. We're not a merit regulator, and in general, the federal government is not a merit regulation. And we're not a set of merit regulators. What we do is we put the information out there and let people make their own decisions.
Commissioner Peirce, I just want to turn to another hot item in the news, and I understand that you can discuss this in your personal capacity, but your personal capacity is still very fascinating. Just turn to Elon Musk just for a moment. I believe we may have spoken about him before, but he's raising a lot of questions because not only is he buying Twitter, but he has shown at least it seems that he has shown the ability to move crypto markets with the power of his tweets, and we've kind of seen this happen again just recently, where ape token have surged because he basically put a collage of monkeys as his profile picture. Now, this is all kind of funny in theory, but I'm just curious, from an SEC perspective, does this kind of ever cross the line into manipulation? If Elon Musk, for example, he owns some of these digital assets, now he's going to basically own Twitter. I mean, where do you draw the line? This came up with GameStop and Reddit, but I just feel like this conversation is very murky, and I'm just curious if you could help us kind of think through the implications of this kind of thing.
Well, I'm certainly not going to talk about any particular person or any particular promotion. If something is a security, then we can bring a case around manipulation if there is manipulation. But again, the facts and circumstances matter a lot. And so you can look at the case law that the SEC has brought to sort of understand what the parameters are, but applying it requires a real consideration of facts and circumstances. So I certainly can't speak to any particular tweet.
Fair enough. Commissioner, maybe just one more comment, but I'm wondering, over the weekend we heard from Warren Buffett during his Berkshire Hathaway shareholders meeting. He said that Bitcoin, he wouldn't buy it for $25 out there. He doesn't see any value in it. I'm wondering what your thoughts were upon hearing those comments, and whether that spirit is mirrored in the SEC at all.
I mean, that's the beauty of the marketplace. Someone thinks it's not worth anything. Someone thinks it's a lot. People come together in the marketplace, and a price results from those differing viewpoints. That's what makes our markets work. And so I favor everyone being able to bring to the marketplace her own opinions and acting on those opinions, and not having the government regulator stand in the way of her acting on her beliefs about the value of a particular asset.
All right, Commissioner. Well, we always love and value hearing your opinions on the matter. So thank you so much for joining us today.
Thanks to both.
SEC Commissioner Hester Peirce. All right, coming up, we've got a crypto markets update with investment fund ARK36. Let's check in on Bitcoin. The CoinDesk Bitcoin price XVX index right now at $39,021. Bitcoin is up about 1.5% over the past 24 hours. The CoinDesk Ether price ETX index is at 2863, also rising about 1%. And the DFX CoinDesk DeFi index is at 213, making gains about 3.4% for the day.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, joining us now to discuss the crypto markets is Ulrich Leike, Executive Director and Portfolio Manager at investment fund ARK36. Oh, I'm sorry, this is Mikkel. Sorry about that. Right. So taking a look at the markets, we've been in a tight trading range, slightly up today, along with traditional markets. I wonder what your outlook is on the crypto markets right now.
Yeah, well, first of all, thank you for allowing me to join. I would say that right now, our observation is that Bitcoin is actually doing relatively well, given the macroeconomic and geopolitical developments. It is definitely showing relative strength also to stock market, especially NASDAQ developments, as we've seen just had its worst monthly close in years. And I think it's notable because it shows that investors don't necessarily treat Bitcoin as a tech stock. And it might not yet be seen as a diversifier as such, but clearly it's doing much better than tech stocks. And what we also see in the space is that there are institutional buyers right now in the spot market buying Bitcoin, and that certainly has an effect on maintaining price at the present levels. So even though crypto funds have noted outflows, we are actually quite impressed, or I wouldn't say surprised, but quite happy, of course, as a cryptocurrency hedge fund ourselves, that there are institutional investors right now going long on Bitcoin and cryptocurrencies. And for sure, that will also be reflected in the price, even if we do go lower short term due to the macro developments.
All right,
so
Mikkel.
if we go, yeah, sorry.
Well, today we also have the FOMC coming out with a statement, as well as Fed Chair Jerome Powell. Likely, we're going to see a 50 basis point rate hike as well. We saw that private payrolls didn't rise as much as expected. I wonder how you feel the economic data will impact the markets.
Yeah, so if we go to macro data and then maybe a little bit more technical data afterwards, I mean, what we're seeing now is, of course, the normal volatility before we have Fed meeting announcement. If we do see, for example, a 50 basis point rate hike, that is likely to drive, for example, Bitcoin and generally cryptocurrency prices lower. If it doesn't, though, that will, of course, be a very real show of the strength from Bitcoin. If we talk a little bit more technically, then I would say that it is, and what we've seen is that it ranges sort of 38 to 48K zone. And of course, holding that 37 to 38K level is crucial. If it does fall beneath that, then in our opinion, a downtrend all the way down to the low 30s is not unlikely. So yeah, I would say, as we saw yesterday also, I don't know if you saw it, we had Paul Tudor Jones speaking in an interview yesterday. And he also said, clearly right now you don't want to own stocks, but he's positive about Bitcoin. And I think I reflect that general mood. We see so much adoption. We see so many. I mean, we had Commerzbank in Germany earlier this week also going into the whole asset space, starting to work and offer solutions in this space. And just the amount of adoption we see, the macro data that we see is just so supportive of medium to long-term price support levels that I think we are, even given the present developments, we are rather bullish.
So just two quick questions here. So in terms of this differentiation between Bitcoin and stocks, I guess I'm not really seeing it. It sort of looks like Bitcoin is kind of going along with the stock market. I mean, maybe you could argue that tech stocks are doing worse, but they're generally moving in the same direction. I mean, are you seeing any different something different that's driving Bitcoin's price and that's driving the stock market's price? Because most of the narrative I hear is that they're putting them both in the same category, right? Like, you're saying one is doing worse than the other, but is it fair to say that they're both being affected by the same macro events? Or is there something else driving Bitcoin's price?
No, I would say definitely we do see that correlation. Clearly, we do see it. So as you can say a way of diversification, yes, it is there because it's faring better, but we still do see a diversification. So what we believe is going to happen over the coming 6 to 12 months is that the institutional adoption of this sector will drive forward and upwards. Also compared to tech stocks, for example, the price developments of, say, Bitcoin. Also, we have a narrative about the Bitcoin, the good old narrative as a store of value. And that narrative is still a driver. We mustn't forget that. So I do believe that that is also a reason for the difference in the price developments at the moment. But for sure, yes, there is a... Yeah, sorry.
No, go ahead.
No, there is definitely that correlation is clear, and there is no doubt that the correlation will continue at least for some time still, in our opinion also.
And I just want to quickly ask you to follow up on something you said. You said we've seen these signs of adoption. What exactly do you mean by adoption? Do you mean just institutions buying up Bitcoin, or are we actually seeing Bitcoin being used I mean, I think this is an important thing to actually spell out when you say adoption, because it's a controversial point, right? Some people would say we aren't really seeing Bitcoin adoption. So what do you mean specifically by adoption?
Yeah, so I would say we both see private sector and government sector adoption, right? I mean, just hearing SEC talk moments before, I mean, when I listen to how much she knows, how knowledgeable she is about the sector, and also the sort of intricate, detailed, you can say positive things that she has also been saying recently. I mean, when I talked to regulators, that was in the European Union 4, 5, 6 years ago, they hardly knew anything about the asset class. And we do see, yes, it is smaller states, peripheral states, some might say, at least from sort of macroeconomic substantial data. But we just do see also that adoption happening in governments, cities, adopting.
But I guess,
Bitcoin
again, do you mean
cryptocurrency.
investment or do you mean actual use of crypto?
I mean both. I definitely mean both.
Okay. All right. Well, and Commissioner Peirce says she's 1 in a million. So, yep, she is very well versed in her digital currencies. All right. We got to wrap it there, Mikkel, but thank you so much for joining us. That was ARK36 Executive Director Mikkel Morch. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
Hey there, it's Zach Seward, co-host of The Hash and Deputy Global News Editor at CoinDesk. You're watching CoinDesk TV.
All right, let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick.
Good morning.
So the Ohio primary elections happened last night, and you were parsing out some of the crypto positions of some of the candidates. What can you tell us?
Yeah, so primary finished. So there were no surprises in some of the races. Representative Warren Davidson, who has been kind of a leading voice on blockchain and crypto issues, won his primary naturally. So he'll be, on the ballot in the fall. As far as the Ohio Senate goes, Senator Rob Portman, who was one of the authors of last year's bipartisan infrastructure bill, has, he announced a while ago he's going to step down. His possible successors will be either, Congressman Tim Ryan, a Democrat who is a sponsor of the Keep Innovation in America Act, a crypto-friendly bill, or it's seen as a crypto-friendly bill, and J.D. Vance, a Republican who has tweeted a little bit about crypto. He's also been endorsed by former President Donald Trump and has backing from Peter Thiel.
Interesting. Yeah, about J.D. Vance, he was highly popularized after Trump had endorsed him. So I wonder, how do these elections foreshadow the upcoming midterms?
I'm going to be honest. I feel like a lot of what we could have expected in the midterms is now a little bit up in the air due to recent leaked Supreme Court draft decisions. I've been keeping an eye on some of the polling, and right now the conventional wisdom is that this seat will probably end up going to J.D. Vance. But again, because of the potential that Roe v. Wade will be overturned, I'm seeing a lot more polling type individuals, pollsters, and those who follow that kind of data suggest that there might be a more competitive fight than people previously expected.
Yep, the political hurricane is a turning. All right, Nick, thanks for joining us. Appreciate your insights. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, let's check in with Crypto Twitter for a tweet of the day, and it is Elon Musk tweeting, "I don't know, seems kind of fungible," and changing his profile pic to Bored Apes, the NFTs, the whole collage. So Emily, what is he saying here? Is he saying that he thinks of Bored Apes are in fact just fungible JPEGs?
I have no idea what Elon Musk is saying most of the time, to be honest.
Fair enough.
I'm not even gonna try.
Fair enough. We won't even try. All right, that's it for First Mover. Thank you, Emily. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Concerns over a recession are growing, but what could that mean for the future of Bitcoin? Welcome to the Daily Forecast, May 4th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. Bitcoin has become increasingly correlated with risk assets as time has gone on, and that's brought its role as a safe haven in times of economic crisis into question. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with a development in crypto space in South Korea. Digital bank Kakao Bank has announced it's reviewing a partnership with a local cryptocurrency exchange. In a local report, Yoon Ho Young, CEO of Kakao Bank, said crypto is a major asset amongst customers and they are looking at how they can provide virtual asset services in the form of a business in a favorable light. Local reports also suggested that Kakao is exploring a partnership with crypto exchange CoinOne, which the digital bank has denied. Kakao Bank is South Korea's largest digital bank with 18 million customers. Meanwhile, competing neobank K-Bank has tripled its number of users since 2020 after it partnered with the South Korea's largest cryptocurrency exchange, BUFFETT. You can find that story and a whole lot more at forecast.news. Meanwhile, has Bitcoin become a victim of its own success? Bitcoin was released in the midst of the Great Recession in 2009, and it's proved fairly resilient to the vagaries of market crisis since. But with the murmurs of another recession gaining steam, what do industry watchers think of Bitcoin's relevance as a safe haven now? Forecast Lachlan Keller reports.
Inflation has been driven to its highest point in 40 years in the US, and the global economy is suffering from supply chain disruption due to China's zero-COVID strategy, while the crisis in Ukraine continues. Central banks around the world have responded by beginning to raise interest rates, with the Reserve Bank of Australia announcing its first increase in 11 years yesterday. But one expert told Forecast that may have been too late.
Potentially the Fed and maybe even the RBA, or really the RBA, should have started to act probably late last year instead of leaving it till now. But the fact that growth now looks to be under threat from multiple sources does create the grounds for concerns over a policy mistake. And that's what's sparking the talk of recession.
Bitcoin, meanwhile, had been gaining a reputation as a safe haven in times of economic crisis. Safe havens are assets which are expected to outperform when broader financial markets crumble. In Bitcoin's early days, its US dollar price was inversely correlated to traditional markets, but that has now changed, with it beginning to track the Nasdaq's composite performance quite closely late last year. But Ben Caselin of crypto exchange AAX told forecasts there should be more of a decoupling between Bitcoin and tech stocks or the Nasdaq over the coming years. He went on to say that a recession could help drive the conversation around Bitcoin's relationship to inflation and loss of purchasing power, as well as the rising and proliferating conversation around sound money. Meanwhile, Igneous Terranus of crypto exchange Bybit says there are key differences between Bitcoin and assets like tech stocks tracked by the Nasdaq composite, and he expects Bitcoin to emerge as the stronger of the two.
Bitcoin doesn't have a corporate structure, doesn't have a CEO. Essentially, like, it's community driven, and then there's full transparency. There's a verifiable scarcity that is programmed into in the beginning, whereas you can always find more gold mines. It's censorship resistant, which has become very important, during a conflict, or when government confiscation is on people's mind.
However, Sycamore says Bitcoin did track equities during the very brief recession in 2020, and he thinks it's still part of the risk asset complex.
In 2020, it was very tightly followed equities very closely. We saw the sell-off of both cryptocurrencies and equities, and then the subsequent recovery. So my view is you're going to see the same thing.
Clouding matters further is the fact that Bitcoin's next halving event is expected in 2024, which could align with the path of a recession should it occur. Bitcoin halving refers to when the reward for mining the cryptocurrency is cut in half, theoretically increasing its price, but limiting supply. But Caselin says that price is not just a dynamic that's related to the mining rate. With over 19 million of the 21 million Bitcoin that could ever be created already in circulation, and a market capitalization of over $700 billion US, he thinks the impact of halving is unlikely to be as significant as it had been previously. For Forecast, I'm Lachlan Keller.
NFTs are definitely taking the world by storm, and India is no exception. Online travel company Make My Trip says it has become the first Indian travel brand to step into the NFT space. In a tweet, the company said its NFT collection named Virtual Vacations aims at bringing to life a kaleidoscopic meta-world view of some of India's best travel destinations. Make My Trip says it will pass on the proceeds from the sale of the NFTs to support projects focusing on promoting sustainable tourism in India. NFTs have also gained a foothold in the tourism sector as a way of issuing tickets, with the Spanish airline Air Europa's first NFT ticket reportedly sold at auction for $1 million, making it likely the most valuable ticket sold in commercial aviation history. The NFT ticket incorporates a trip from Madrid to Miami, as well as an exclusive digital artwork. The annual Coachella Music Festival is venturing into the world of NFTs. The Southern California Fest launched 6 NFT collections, some priced as high as 6 digits, with perks ranging from free Ferris wheel rides to a lifetime access to future festivals. Yehuda Peche, NFT relations strategist at CryptoSlam, a cross-chain NFT data tracker and aggregator, joins in to discuss the exciting world of NFT ticketing and all that it offers on NFT Insider. Good seeing you again, Yehuda.
Hey, great to see you again. Thanks for having me.
Well, to kick it off, there's just so much potential here with NFTs as a ticket to the concert from your favorite artist, or a game, or even a conference. We've seen with Coachella how different NFTs were used to scale the offerings and customize the fan experience. This goes beyond what, a QR code could do.
Yeah, that's right. Coachella is really one of the first I've seen lean into the gamified event experience with NFTs. They gave early access to lines. They had some that you could redeem for art and posters. And like you mentioned, even 10 lifetime Coachella passes. Each of those could be done in the traditional world without NFTs. So where they really innovated was simply using the tech. And over the years, others will build onto what they've done. They'll probably build onto what they've done, and we'll see more robust experiences. What we're likely to see, though, fan clubs that act as a ticket that also you can redeem for merch. And then let's see how those tickets evolve once these major events move into the metaverse. In general, though, NFTs as access passes, it's a key part of Web3, and we're going to see a lot of innovation there.
This is just the start, isn't it? And the sports world is also not far behind. The NBA All-Star VIP Pass NFTs are being described as groundbreaking, and they go beyond, the fans getting a meet and greet or special merch, doesn't it?
Yeah, they really do. And the sports world is really leading the charge into NFTs as one of the biggest innovators. They really were early adopters to Web3, and they basically put NFTs on the map with NBA Top Shot. Those All-Star NFTs, they're like the ultimate All-Star experience. They're a 5-year pass to the All-Star game. They have bonus perks like the in-person events, the tours, the meet and greets, handful of other things. So like Coachella, they're part of a much bigger experience. So those passes, yes, they are groundbreaking, but I also hope down the road, those kind of things that they're offering are considered normal. And we'll see real innovation when the lines between tickets and collectibles and games and fantasy sports start to blur.
So far, we've talked fan experience, but going beyond that, tokenized tickets also give event organizers a way to benefit and track secondary ticket sales, cut out the middleman, and possible scalpers. Are we just scratching the surface here? What use cases are you excited about?
Yeah, everything you mentioned are huge use cases already. And also mentioned the preservation of your ticket is not a small deal. We've had ticket stubs from events like Michael Jordan's first appearance, Jackie Robinson's first game, sell for $500,000. So now that your digital ticket can be preserved and can be verified, there's a different type of potential value that your stub has. So yeah, all of that scratching the surface. Over the next few years, we'll see, people are going to see what like Gary Vaynerchuk has done with the VFriends collection, how he's managed to create tickets that are sought after collectibles, that are funding a major multi-day professional conference called VCon, all of which are possible because NFTs are so easy to distribute and validate. So your one ticket can now do a lot, and builders and brands have really taken notice of that. Let's see what they can deliver over the years.
The world is an oyster for NFT ticketing. Let's see what lies ahead for it. Thank you so much for some very interesting insights, Yehuda.
Thanks so much.
And that's the daily forecast from our vantage point right here in Asia. For more, visit focus.news. I'm Focus Megha Chadha. Until next time.